Hello guys, welcome to my channel. This is Eunice Financial Academy. So in today's video we are going to see how to journalize business transaction. So today we are going to be looking at journal entries and how to journalize business transactions. So first of all, what is a journal? So a journal, also known as book of original entry, is the first book that any transaction in a business is recorded. So remember the definition of accounting that says that it is a process of recording business transaction. So when you start a business, the first thing that you have to do is to own source document. And when you own those source documents, you need to record transactions because you are going to be performing transactions day in and day out. So you need to record these transactions. So the first place that you have to record these transactions are in a journal. So in accounting, we call it journal entry. So if you want to understand accounting, you need to understand what is a journal and how to pass the journal entries. So we are going to be doing a lot of debiting and crediting. That is the most things that we'll be doing in this journal entry time. We are going to be doing debit and entry. Either we are debiting and or we are crediting. So that is what we have to be doing. And you need to understand the double entry principle. Please, you really need to understand it because it is the main core of accounting. Meaning accounting evolved around debit and entry or debit and credit entry, sorry. So what is a debit and what is a credit? So a debit is an entry made on the left hand side of an account. So it is an entry made on the left hand side of an account. Meanwhile, the credit is an entry on the right hand side of an account. So debit increases the expense and the asset account and reduces the liability, equity, and revenue account. Meanwhile, the credit increases the liability, equity, and revenue account and decreases the expense and asset account. So let's look at this simple table here. So looking at the element of the financial statement, we have 5 elements of the financial statement, which is the asset, the expense, liability, equity, and revenue. So this is what we are going to be seeing all the time. Either we will see a transaction that contain an asset account or an expense account or a liability or equity or revenue. So we are going to be coming across this time with that number. So if it is an asset account, asset have a debit balance. So if asset have a debit balance, it means that the account is increasing. So for instance, if we buy a furniture for the business, so furniture is coming in and it is also adding to the other asset, meaning it is increasing the asset account. So we debit the asset account with the amount that we bought the furniture. So it depends on the means of payment. Maybe it was cash or by check. So if it was cash, it means that the cash account is decreasing. So we credit the cash account. So we are going to do the same for expenses. Like if the business incurred some expenses, maybe paid for rent, you see the rent account is a debit balance. So it is increasing. So we debit it. And the cash account is a credit balance because at that time cash is going out of the business. So we credit the cash. So we also have liabilities like loan. The business can decide to take a loan. So if we take a loan, it is a credit balance. It is a credit balance because loan is a liability. So all liabilities are credited. So it is a credit balance. It is increasing the liability account or the loan account. So we are crediting liability account and we debit the loan. So we are going to be doing this for all the elements of accounting. So those are some of the few things that you need to understand before you start doing your journal entry. So there are some techniques that you also need to consider when doing your journal entries. So the first technique says that you need to identify the accounts. So which accounts are affected by the transaction? So you need to identify the account. So in each transaction, there must be at least 2 accounts or more that is being affected or that are being affected by a transaction. So you must identify the account. And then the next one says, for each account, determine whether it is an increase or a decrease. So looking at what we just explained, so if for instance it is an asset, it says determine each account or determine whether it is an increase or a decrease. So looking at the asset account, for instance, if we bought an asset has a debit balance, so it is increasing, and the asset account is increasing and the cash account, for instance, is decreasing. So which account is increasing and which account is decreasing? So the asset account is increasing, so we debit, and the cash account is decreasing, so we credit. So the next one says, make sure the accounting equation stays in balance. So you need to understand the double entry principle, which says the debit side must be equal to the credit side. So if you have the assets account, you bought assets. Say you bought the asset for $5,000. So you have to credit asset or debit asset, with $5,000, and you also credit it with cash for $5,000. So you are not going to say you debit the asset account with $5,000 and then you will look for another amount for cash and you credit it. No, the debit must be equal to the credit. So those are some of the principles or techniques that you really need to understand if you really want to understand accounting and other problems that we will be looking at in journal entry. So we are going to look at the format of journal entry. This is a simple format that you need to follow, how to present your journal. Here we have the date. You write your date here, and we also have the account title. The account can be cash. Here we have cash, owner equity, and then you also give the narration of the transaction, and then the amount. If the amount is debited, you put it under the debit column. If you have to credit the amount, and then you put it under the credit column. So this is a simple format for journalizing transactions. So here is a problem. These are simple problems that we can journalize them. So we move from the simple to the complex. So these are 7 questions on journal entries. So the question says journalize the following transactions. So the first question says on February 1st, paid electricity $10,000 or $10,000. So let's go back to the technique of journal entry. The technique says, the first one says, which accounts are affected by the transaction? So looking at this account or this transaction, 1st February, paid electricity. So we are paying electricity with cash. So in this transaction, we have the cash account and the electricity account. So the amount is there, which is $10,000. That is the amount charged. And then we have to look at the one that is receiving. We go back to the golden rules of accounting, which says, the second one says, debit the receiver and credit the giver. So in this transaction, which account is receiving and which account is giving? So if we are paying electricity, it means that electricity is receiving and cash is giving, or cash is going out. So we have the electricity account and we have the cash account. So let's look at the solution. So we have the electricity account. So electricity account is increasing, so we debit it and we credit the cash account, and that is payment for electricity. So those are the 2 accounts that are being affected by the transaction. And then the next one says 2nd of February, receive cash from sales $25,000. So you need to identify the accounts in this transaction. So the first account is the cash. The business is receiving cash. So when you are receiving cash, or when an account is receiving, go back to the golden rule. It says that debit the receiver and credit the giver. So which account is receiving? The business is receiving what? Cash. So we debit cash, and sales is going out, so we credit the sales because the business sold some things and then cash is coming in. So we debit cash and we credit sales. So those are the 2 accounts that are involved in the transaction or are being affected. So let's look at the solution. Here, 2nd of February, so we debit cash and we credit sales. Yeah, so that is a cash sales transaction. So the third transaction says on the 15th of February, paid insurance $5,000. So we paid insurance for $5,000. We paid by cash. So we have the cash account and the insurance account. Those are the 2 accounts that are being affected in the transaction. And then which account is receiving? We are paying for insurance. It means that the insurance account is receiving and the cash account is giving. So we debit the insurance account and we credit the cash account. So insurance account is receiving. Don't also forget to put your dates. Yeah, insurance account is increasing or receiving, so we debit the insurance account and we credit the cash account. So we are debiting with $5,000 and crediting with $5,000. That is for payment of insurance. And then the fourth transaction. The fourth transaction says on the 19th of February, paid for advertisement, $2,000. So which accounts are being affected in this transaction? We are paying for advertisement. So advertisement is receiving and cash is giving. Remember the golden rule: debit the receiver and credit the giver. So if advertisement is receiving, we are debiting advertisement and we are crediting cash. So those are the two accounts that are being affected. So we debit advertisement with 2,000 and credit cash with 2,000. And then the narration, payment for advertisement. So the fifth transaction. The fifth transaction said on the 20th, paid for rent, $20,000. So which accounts are affected? We are paying rent. So if they don't specify the means of payment, it is cash. So we have the cash account and the rent account in this transaction. So rent is receiving because we are paying rent. So the rent account is increasing or is receiving, and the cash account is giving or decreasing. So if the rent account is increasing, it means that we have to debit rent and then we credit the cash account. So this is, we debit rent and then we credit the cash account with 20,000 and 20,000. That is respecting the double entry principle. The debit must be equal to the credit. So the next one is we bought supplies. That is the sixth transaction. February 21st, bought supplies, $1,000. So if we bought supplies, it means that some goods, or we bought the goods and the goods are coming into the business. So if the goods are coming into the business, it means that the purchase account is increasing. And then we bought these goods with cash. So we have the purchase account and the cash account, or you can put it the supply account or supplies account and the cash account. So here we debit supply with $1,000 and we credit cash with $1,000. So remember, you can also put purchases since we are buying, so it is still correct. Or you put supplies. So here we have purchase, which is $1,000, and cash $1,000. So purchase of what? Supplies. We purchase supplies. So the last transaction here says on the 21st of February, we drew $5,000 for personal use. So this one is another transaction altogether. So if we say we drew from the business, or we are withdrawing for personal use, it means that the owner of the business have withdrawn some money. So if the owner takes in maybe goods or cash from the business, in accounting we call it drawings. It is drawings in accounting. So the owner is taking from the business, that is drawings. So we debit the drawing account and we credit the cash account because cash is going out of the business. So how much is the owner taking from the business? The owner is taking $5,000 from the business for his personal use. So let's see the journal entry. So we debit drawings 5,000. We debit drawings 5,000 and we credit cash because cash is going out from the business 5,000. So at the end of your journal entry, you need to sum all the debit sites or the debit transactions and the credit transaction. So at the end of it, the debit entry should be equal to the credit entry. So looking at this transaction, you'll see that my total here on the debit side is 68,000 and on the credit side it is 68,000. So the debit is equal to the credit, thus respecting the last technique which says that the accounting equation must be in balance. So thank you for watching. So next time we are going to look at a complex journal entry. Please don't forget to like and subscribe so that when I upload the next video you will be the first to watch. So we are going to look at the complex questions on journal entry in our next video. Thanks and see you.